right, so we're on the third slide, Jim.
They're okay.
Yep.
Oh, we are behind time, that you're trying to tell me?
So, as always, the number one rule in investing is, if I could tell you what was going on, if I could tell you what the markets were going to do this year, or what stock was going to be number one this year, I'd be on a tropical island somewhere drinking fruity drinks with tiki umbrellas in it. At the end of the day, nobody knows for sure what's going to happen. So it's always just important to keep that in mind, that this is not something that anybody can tell you what the exacts are. So as I always do, I start off by saying, so the predictions I made for 2021, how did I do? One of the first predictions that I made last year was I said that there would be huge swings in the market. And I would give myself a C- on that one. We really didn't see huge swings. The market was up and we saw a pretty large increase, but we never saw ups and downs and everywhere in between, and I thought we would see more up. So I give myself a C- for the volatility that I predicted that we would see. I kind of got a couple of these mixed up. So these are a little out of order, but I just left it and we'll go with it. I made a prediction on interest rates, and I give myself an A+ on that one. My comment last year was we would see fairly a dramatic rise in interest rates in the last 3 months of the year that would continue, and that we would end the year pushing 2% for the 10-year Treasury rate. Next slide gives you the 10-year Treasury rate, and when I ran this a couple weeks ago, oh, you can't really see it because it's blocked out at the very top by the screen. At the day I printed this, the 10-year Treasury was at 2.01%. So I was off by 1/100th of a point. Again, it's pretty hard when you look at this to see the bouncing around of interest rates to think that I was that close of it. And the 10-year Treasury is just a gauge of interest rates that leads to what lending can be. When you go into the bank and you get a mortgage rate, the mortgage rate is based off what the 10-year Treasury is at. So the 10-year Treasury is a benchmark that just gives us all an idea about what lending rates is. And if you went to the Treasury right now and you lent up money to the government, what would they pay you in interest? Right now, it's about 2%, which is very, very low. We'll talk about that a little bit more. But very well, I might pick about interest rates. My stock picks, I give myself partly an A on the next part, because I predicted that we would see a lot of volatility, and I was wrong on that one. But I also picked it that on the next slide that I said we'd see a lot of rotation in the market among sectors, among styles, among market cap. That I said we'd see a lot of rotation, and I picked that income stocks would be better than growth stocks. This was pretty far out there because we're 10 years in a row of the stock market going up. And if you follow the stock market stuff, if I said to any of you, give me a market darling, Amazon, Tesla, Netflix. These are all growth types of companies. They've gone up dramatically. Their businesses are growing dramatically. If I give you an example of a value stock, CVS, McDonald's, Verizon, those names, Maggie shaking her head, those things have not done well for the last 10 years. So I predicted last year that income stocks would lead the market rather than growth stocks. And I'll show you here in a second that I was pretty much right on that. So if you go to the next page, just to give you an idea, this gives you some return information. So take a look at this. If you look at it doesn't matter which one of these we're looking at. These are all different variables of general markets. If you look at the Russell Mid Cap, you see 5-year growth numbers. Growth is average 19.81. Value is average 11.18. 3-year 27 and 19. Now look at last year. Now you go to last year, and all of a sudden it flips, and value did way better than growth. Same thing in when you look at the Russell or the Russell 2000. Growth is better. Value did much better. So I predicted that value would be better last year than growth, and that turned out to be true. Again, I said that we'd see rotation. Green is good, red is bad. So when you look at the last year, stocks in the S&P 500 that paid a dividend, at the beginning of the year, green was at the top, the high dividend. At the bottom of the year, the green was at the bottom. Stocks get judged by a thing called PE. PE is price to earnings ratio. Take the earnings that a company makes, divide it into the price of stock, and it gives you a number. In general, you want a PE with a lower number because it means as an investor, I have to put less money into it to get money back. Long story short, it's the same thing held true. At the beginning of the year, the high PE stocks did better. By the end of the year, the low PE stocks did better. So when I said that we'd see a lot of rotation in the market, we started to see that last year. And then finally, this was probably as dramatic as I can give you when I tell you that nobody can tell you what the markets are going to do. This is the ink blot test of investing. There's 12 sectors of the S&P 500. So if you're Google, you're a technology company. If you're CVS, you're a consumer company. And so we take all those companies, we put them all in a category together. Well, take a look at energy, for example. For the last 5 years, energy has averaged a negative rate of return. For the last 3 years, it's averaged just 4%. And you compare that to technology. For the last 3 years, energy stocks are averaging a 4% rate of return. Technology stocks are averaging a 42% rate of return. Extrapolate that over 3 years, and that's a ton of money. Now look at last year. Energy stocks at a 54% rate of return. Goes back to the same story. Nobody can tell you. I can't tell you. I wish I knew what sector this year was going to be number one. I'd have all my money in it. I'd be a millionaire, and I'd be funding the Rotary Club. I don't know. Nobody else knows anything on the planet what's going to be number one from one year to another. So again, I just show that when I say I predicted that there would be a lot of rotation going on, and we saw that last year. That was a good part. The bad part was very rarely do I get individual stock predictions, and last year I did it. And I said that quote unquote COVID stocks would lead the way, and I was very wrong on that. I was right for a good part of the year, and I'll show you that in a second. I was right for a good part of the year, and then the last quarter of the year, the market started doing that rotation and it fell out of bed. So, for example, the next slide is I just give you CrowdStrike. If you're not familiar with CrowdStrike, it's the name in the COVID world that for all of us that have been working remote. If you're working remote and you have to log in and put a code into something to get another code to log into your work, that's CrowdStrike. They provide that security level. So it's a new up and coming, I call it a COVID stock. It was doing well, it was doing well, it was doing well. And then like a lot of COVID stocks at the end of the year, the market, for whatever reason, it decided that it ran its course. They wanted to go a different direction with investing, and you can see what happened. So take a look at this, because when people talk about, kids want to go in and do their investing, or somebody says, I want to put my whole 401k in one stock or something like that. Take a look at this. This is a stock that's a good company, very viable, does all the right things. This thing was down in the low 160s in March of last year, went all the way up to $300, and everybody's going, this is great, I'm killing it, I'm making tons of money. And then look at this, went from 300 down to 150 in about a month or two. That can happen. That's the real world of investing, and we're all victims of the last 10 years. And we think if I buy a stock, it can do nothing but go up. Stocks can go up, they can go down. You got to do your research and know what it is you're owning and why you're owning it. So I get a D for the individual picks about being in COVID-related stocks, but I can't get them all. Right. So that's the COVID. So 2022. As I say every year, it's like this every year. It's the same thing, but different. I don't remember exactly what it was a year ago, but a year ago, I think it was a presidential election, or it was this or that. Today, it's the Ukraine. What it'll be a year from now, I don't know. But there's always something that makes us go, oh my gosh, Armageddon's coming. We can't keep going up. There's a negative thing going on. So there's always something that has you worried. The one that we hear on, and you turn on CNBC in the morning, is inflation. Everybody wants to talk about inflation. It's real. I'm not gonna lie. The biggest one you see right now is go try to buy a used car. It's there. It's real. We see it in other things. It's real, but I don't think it's as much as we hear on the news. And I think it will see price inflation going on, but I don't think it's going to be as dramatic as what we all think. We're not going to go in my opinion, go into the grocery store, buy a gallon of milk and have it be $7 in a year. I don't think that's going to happen. So inflation is real and it is happening, but I don't think it's going to be as big of a deal as what we hear on headline news. The next one is an interesting one because, believe it or not, this is brand new to many people. I have Derek with me. Derek is a trust trader with the company now. I can say this, Derek's a young kid. He hasn't been through this before. For the first time since 1994, we're going to see the Federal Reserve is going to raise interest rates. What does that mean? The government tries to keep the economy as much as they can on an even keel. We don't want things to get too bad because then it's bad for everybody. We go through recession. But we don't want things to get out of control because that's when we get inflation. And inflation makes the prices of everything go higher. People go into their job and say, I need to get a raise. Companies need to raise their prices to make more money so they can pay for it. So inflation just tends to be bad for everything. So the government tries to control interest rates so they can try to keep the economy going on an even keel. So for the last 10 years or so, post 2009, the government has kept interest rates arbitrarily low to try to keep the economy going. Well, now we're at the point where the government's looking at economic data and go, oh, it's time we start to do something about this, or inflation is going to start to get out of control. So what the Fed does is the Fed raises short-term interest rates, and that makes borrowing costs go up in short term. That means that instead of companies just going out and borrowing massive amounts of money for infrastructure to buy things or whatever, the price goes up and slows that down a little bit. So we see that, you know, instead of getting buying a new car and getting a car loan at 2.5%, you're gonna start seeing car loan rates go to 3.5%, and mortgage rates are gonna go up a little higher. Every time it takes rates up a little higher, it slows somebody or something down from spending money. So for the first time since 1994, we will see, I'm gonna go on as much aluminum as I can, we will see the Fed raise interest rates. They meet sometime in March, and I think they will raise rates in March. And my prediction is we will see them raise interest rates 3 times this year. And that's again a big deal for the last 10 years. Basically, the Fed funds rate has been 0. They took it as low as they can get it. They're going to start raising rates this year. So we will see 3. That's a big deal, but in the bigger scheme of things, it's not. I referenced the 10-year Treasury at 2%. The 10-year Treasuries historically since the Great Depression averages 4.5%. So we are still way below normal interest rates. So interest rates going up is a big deal. If it happens gradually, we can digest it. I was just telling Derek on the way over, I have my analogy for everything. Interest rates going up gradually is no big deal. It's like the snow. If we get 3 inches of snow tonight, no big deal. We get 3 feet of snow tonight, tough to digest. Schools have to close. It takes a while to get the streets closed. If interest rates go up over the next 10 years, it really won't be a problem. It's if interest rates go up like this that it becomes a problem. So I think we will get an interest rate increase, and I think we'll see 3 this year. I still think that we will see continued stock market rotation, and I still think we will see value outperformance growth. You go and buy a company like Google, pays no dividend. The only way you make money on Google is that the price of Google goes higher. So Google takes all the money that it makes and it reinvests it back into the company to try to continue to fuel that growth. Or opposed, I continue to reference McDonald's. You have a company like McDonald's, no matter what happens, McDonald's to me, as I always tell everybody, is the most bulletproof investment you can own. If we go into a recession, McDonald's is going to go up because guess what? We're not going to Patrick's for a steak. We got to go to McDonald's. If the economy does well, we got more money, more frappuccinos for everybody. So I like to say that McDonald's is the most insulated stock that you can find. I think we're going to continue to see that this year. That people are going to take money out of these bigger risky investments, Tesla, names like this, and they're going to continue to put money into the safer stocks, CVS, Verizon, McDonald's, Walmart. You name it. So I think we will continue to see that value type of names that we know are going to be either good, bad, and different, are going to do better than these high beta names. You go back to that CrowdStrike, you bought into that thing, watch that thing go from 350 to 150, you're a little spooked by it. So I think people are going to continue to take money out of those riskier names and stay in the safer stuff. The last slide that I have is there's always the bad that we talk about. I can't remember a couple more of them. But cannabis was a big one a couple of years ago. Bitcoin was a huge one a couple of years ago that everybody had questions about. There's not really that big thing that we have for this year. But one thing I'll point when I went back to the CrowdStrike and things like that is the last slide, Jim, is everybody wants to own the cool stock. What's hot? What's going on? And most people have probably not heard the name Cathie Wood. Cathie Wood came on a couple years ago because she created this new mutual fund, and you can see in 2027, her fund did an 87% rate of return when the S&P 500 did a 21% rate of return. Her fund was in the top 1% of all mutual funds in the country. She's on CNBC, she's a market darling, everybody loves her. Check this out, in 2020, her fund did 156% rate of return when the S&P 500 did an 18% rate of return. So you can imagine again, she was the guru, and everybody wanted to listen to Cathie Wood and do whatever Cathie Wood had to say. Take a look at 2021. Cathie Wood's fund did a negative 23% rate of return when the S&P 500 was up to 28%, and she was in the worst 1% of funds. I go back to, again, if you ever hear Mike Hackett talk, you're going to hear this, is you can't buy the hot thing, the cool thing, whatever everybody else is saying. My analogy again, Crocs. Krispy Kreme donuts. Krispy Kreme donuts was the most amazing thing ever. If you drive anywhere, there was a Krispy Kreme, and you saw that light flashing front, and now everybody had to get one. They went and put one in every Jewel and Speedway, and now nobody cares about Krispy Kreme because it's a novelty item I can get anywhere that I want. Be careful about investing in fads and things that you just hear about that says everybody has to invest in these Some things will stick. Some things will become the norm, but a lot of things won't. For every Netflix that comes on that changes the revolutionizes the world, something's not gonna do that. So just be careful about getting into these things and seeing on CNBC that everybody says you gotta own this because Kathy Wood says you gotta do it. If Kathy Wood was going to be number one every year, the whole world would have all their money in with Kathy Wood, and there would be no other mutual funds or no other investments in the world. So just be careful. That's my last thing, is be careful about investing in pads. Oh, I will give you one more thing, because I wasn't able to put this in to lots of questions about the Ukraine and Russia, and it is very real. But that falls along with pads. Don't let what's going on today affect your long-term investing. Most people, I'll even say these guys here, are young in this club. If you have a 401k, Andy can't go change his 401k and reduce his stocks because of what's going on in the Ukraine. It's something that's going on today, but you have to, what am I trying to accomplish? Andy and I don't know each other. I don't manage his 401k, but I'm willing to bet Andy's trying to save money for retirement. He can't let something going on in February 22 influence the decision about when he's going to be able to retire in 7 years, 12 years, whatever. You have to maintain your focus about what it is you're trying to invest in, and don't let short-term things change that. I have this, and anybody who wants one can take it if they want, because we hear a lot about this Fed hike stuff and interest rates going up. So when the Fed starts to raise rates, I have a chart here that says that goes all the way back to 1987. There's been 1, 2, 3, 4, 5, 6, 7 times the Fed has raised rates, where we've had rising rate environments since 1987. Only one time over the next 12 months when the Fed started to raise rates, the stock market goes down. So everybody says interest rates are going up, the stock market's got to be bad. No. Stocks, companies make money. Go back to McDonald's. McDonald's is going to do whatever McDonald's has to do to make more money. It doesn't matter what inflation is doing. It doesn't matter what's going on in the Ukraine. McDonald's is going to manage their company about how they can make money with whatever's going on in the world. So don't let Ukraine, don't let Fed interest rates affect your decisions with stocks. So that being said, I know I threw a lot out there. Do you have any questions? Maggie.
So I mean, I think it would be interesting, everyone, just how would someone pick like what mutual fund they want for their retirement funds? It's like, I don't think you want to pick individual stock, unless we're gonna hire you, then we do that.
Yeah, I mean, you can't pick individual stocks. It's, if everybody ever watches Jim Cramer, one of the things Jim Cramer says is if you can't spend an hour a week spending time on your stocks, you shouldn't own individual stocks. It goes back to, again, you got to know what your company is doing. You can't just buy CrowdStrike because Mike said something about CrowdStrike. You have to do your own homework. If you're going to invest in mutual funds, there's a lot of places you can go. If you're on Ameritrade or any of those sites, you can do screens. So you can put things in there. I want stocks. I want safer investments. So I think I would recommend going on to any website you can and using screens that keep rolling that down. The biggest thing in mutual funds, I would tell you, check and see what the fees are on a mutual fund. Most people don't realize that. I'm sure Maggie's heard this a million times like I do. I have this mutual fund, so I don't pay anybody anything to manage my money. I don't need Harvard Trust because I'm doing it for free. No, you ain't. The way a mutual fund works is it takes all of our money. We could create a mutual fund right now, the Rotary Fund. We're going to put all of our money into one fund. We're going to put it into a fund, and we're going to pay Mike to manage it. That's a mutual fund. That's all it does. It takes everybody's money, puts it into one pool, and you pay somebody to manage it. The reason why people don't think they pay a fee is because Mike takes his fee off, and then I come back to you and say, you did 7.4%. I tell you what the return is after I took my fee out. So when you see it and they tell you here's your rate of return, it doesn't have any fee numbers in it because they took it out before they did it. So if you're going to be in a mutual fund, the biggest thing is make sure you look to see what the fees are, because a lot of mutual funds also have what's called loads, front end load or back end load. You want to invest in my fund, 5% to get in. That's what it's going to cost you to get in. So wait a minute, I gave you $1,000. You took $50 out of it, and then I get another $950 invested. So check on a mutual fund. The number one thing on a mutual fund is make sure you know what the fees to it are, because they get pretty expensive.
What's the difference between a mutual fund and an ETF?
That's a great question. Exact same, but the exact opposite. The exact same is we take everybody's money, we pool it all together. So it's the exact same in that level. Exact opposite in that at a mutual fund, we're going to pay somebody to manage it. So we're going to live and die by what Kathy Wood decides. In an ETF, all we're gonna do then is we're gonna pick some index. If you ever turn on the TV, you're gonna hear about three main indexes: the S&P 500, the Dow Jones, or the Nasdaq. That's the three biggest trading sites of stocks. So in an ETF, all we're gonna do is we're gonna say for the S&P 500, we're gonna create a mirror of it. We're gonna own the exact same investments, the exact same way it looks in the S&P 500. We're never gonna make any change to our investment unless that index makes a change to it. So by doing that, since nobody's managing it, we basically have no fees to it. So that's the biggest difference with an ETF is number one, you're not paying anybody to manage it. And then number two, your fees are much less because nobody is managing it. I would recommend, Maggie can have her own, I recommend an ETF, especially if you don't know exactly what you're doing. We go and invest in Kathy Wood and it goes down. Now what are we gonna do? We don't know investing and it's down. Do I sell it now? Why it's down? Do I put more money into it? In an ETF, you're guaranteed you're gonna get whatever the index does. If the S&P 500 goes up 10%, you go up 10%. If it goes down, you go down. So you don't have to worry about as an investor, did I do well? Did I do bad? Did I pick the right one or the wrong one? So I would recommend it, especially when you don't have a lot of knowledge in investing, you use ETFs because you can keep your fees down and you know that you're going to get the rates of return of whatever the index is that you're bought into.
And I took that advice very good because I got an ETF. And that's what I
Somebody gave
got.
you that advice a few
You
years
gave me
ago?
that advice, that's
Yeah.
right.
Yeah, and it probably
He gave me that advice around 5 years ago, and I've done very well with it. So, and I'm in one that mirrors the S&P 500. It's called SPY. I like the name of it. That's why. I kinda like that.
Where do you find that? Where do you go to do that?
You can
Go to someone like.
Yeah, well, you can Google search it.
On Mike, talking Mike.
Right,
He only deals with the big dogs.
you all know me, everyone in this club knows me. I will meet with any one of you, I will look at your 401k plan, I will talk to you about whatever you want to do. So even it's not about me at Harbor Trust, we don't charge anybody to sit down and meet with you, and especially me. I will talk to anybody, I did it yesterday. And my guess is if I told everybody in this room, 80% of you would raise your hand and say, I know who that is. We met, we looked at their stuff, I gave them my ideas, we talked about different options. We don't charge to it, and it's exactly as I said to her. Guess what? If I treat you right, I do right by you, I give you good advice, I may never get your business, but guess what? You meet with somebody else, talk to somebody else, and they're asking questions. You gotta go talk to this guy. I talked to him, and so I will meet with you, I will talk to anybody you know, and I don't care what the dollar amount is. Yes, Harbor Trust does larger numbers, but I'll talk to anybody, because how do I know? I go talk to Marty and they can find Marty. Marty doesn't have anything. Marty's got nothing in his 401k plan, he spends it all. How do I know Marty's not gonna win the lottery tomorrow? So I don't know. Marty's not good enough, you can't meet with him. And then tomorrow when he wins the lottery, you think Marty's gonna call me then? So I will meet with anybody you know, I will talk to anybody about investing and I'll help them in any way I can. So you can talk to me, you can Google search ETFs, you can find them everywhere. Same concept with an ETF. You can find an ETF about anything. You can buy an ETF that is only cryptocurrencies or only sports betting companies now. That's a big one that's out there. You can buy ETFs like anything. You can get one that's anything. Stick to the main indexes. Stick to the S&P 500, the Dow, because every time you scroll down another level, now you are taking those bets again. You go and put it only in vaccine stocks. You're going to live and die as the vaccine companies go. So just be careful about scrolling down too far, as long as you don't do it. Don't go scroll down too far.
Anybody online got any questions?
Tom Keen, you have a question?
Well, how you doing, Mark? No, I don't.
All right, if nobody else has any questions, again, I have copies of any of this, if anybody wants it, I will answer any questions anybody has or meet with anybody, you know, if anybody wants to meet with me.
Thank you very much.
Thank you.
All right, were any of you guys supposed to be starts?
I think it was, no, Adam was last week.
What was that?
Adam was last week.
Yeah, that was last week, so I'm not sure who was.
I don't think it was me. I'm not gonna believe.
Who wants to be starts? Anybody?
Just
Mike Hackett.
Like Hackett. Yeah, you're good for starts. We're gonna invest in Mike.
you just read.
No, that's all right.
Let's see. All right, yes, I will go first. I'll do it for every reason, I'll do $20. But I have a guest, I have Derek Lasky with me. Derek joined Harbor about a year ago. Thank you. He is from Valpo and he is at Harbor Trust. He does the trading for our company. So that's Derek Lasky. Does anybody else have a guess?
Yes, I have a guest Chief of
Yeah.
Services, Julian Ashley, is my guest today. When you guys see Chief Kim, give him a hard time, so I try to get him to come too.
I have a guest today too, it's Amy Hennig with the Woodward Furnishers. I got my card.
And we have no guests online, right?
Thanks.
All right, no visiting Rotarians, right? All right, we will do for the good of the order. We'll start. Cindy, do you have anything? There's gotta be something.
We exceeded our Christmas goal, thanks to everyone.
All right. Maggie, you got anything good for us?
Let me think. I got to spend the day with Katie. We were at the transit oriented development meeting for one region in Valpo, and we learned about all the cool things that are going on there, and how important housing is. So we're gonna see a lot more housing being built. Skylar made a presentation there, and he said that we have on the docket now up to 1,000 units in Michigan City, the transit development area. So this is good for Rotary because then we have potential new sources of members. So that's my thing, and it was great to see Katie there. I'll give $5.
Anything
I
fun, Maggie?
guess I'll go next.
Yeah, so I'll just tag on to that. I think there is a lot of opportunity for growth in Michigan City right now. I'm sure you'll see it as you drive around and see construction. And over the next couple of years, you'll start to see construction go up because of apartment buildings and that kind of stuff. I think it's important to note that as our city grows, it's important for us to focus on quality of life in Michigan City. And part of that is public safety. There is some conversations at the county level to implement a public safety local income tax, which I believe is important for us to invest in our future for residents that are currently here in this county, as well as those that are coming to us. It's a small increase. So there's a public workshop in Michigan City about it next Thursday, the 10th, one at noon and one at 6:30, I believe, at the City Hall. So we have information or want to learn more about what that means for us or individuals. Yes, we've already sent a letter of support to the county council, and we will be doing the same, but in that meeting next week, I'll probably go to the new meeting and make sure that our businesses and an advocate for that. Yes, you're welcome. I don't know where that's coming from. Is that phone ringing?
Is that your phone?
The other thing I would note is that we just released this morning in our weekly newsletter and then sent out to media our press release announcing our finalists for our awards categories that are coming up at our annual dinner on March 25th. There's a couple different categories, but I'll just talk about the one is Young Professional of the Year for 2021, and of the two finalists, one is sitting right next to me. One is on the screen, although you can only see her name. Kara Jones is one of the others, and then Holly Martinez. Yeah, Holly Martinez is the third finalist in that. So we will announce the winner for that category and then others on March 25th at our annual dinner.
Very good.
Kara, I can't see you, and then you're on mute, but I expect that you're gonna have some money for somebody pretty soon for this nomination.
Are you trying to say I owe you money?
Yeah. Exactly. Jessica.
Your checks in the mail for nominating. Thanks, Katie, for that. And, good luck, Kara. I'm a solid third place in those three. But it is fun that two of the three of us were in Michigan City schools. How great is that? I don't have any cash because I hard. But I'm gonna give a quarter for my guest. $1 for my guest who is running for sheriff in the upcoming election, by the way. So if you want to get to know Andy and ask him any questions, he's always open for a conversation. My other $1 is
Alinsky Award. We are still taking nominations for the Alinsky Award. I think we need them by the 11th. We have one, so get your nominations if you want to nominate anybody for that. Also, apple dumpling is next month, and I did it for 100 years. I took it over a couple years ago, but if anybody wants to work with me on that, it's a big project, so I'd love to have some help.
And all the materials are in my office.
They are. It's like the Selby Sherman's at least for apple dumpling bucks.
Marty,
So I have a couple of dollars. One is for, thank you, Julie Lee, for having me on the radio station today. Talking about Salvation Army. It was a great time and always great to talk about the Army. So many good things going on. Two is for Jessica, Katie already, Katie already took my thunder. Talk about Jessica being a finalist. Three for Katie for hosting a legislative session with the chamber. It was good, and she came to talk about the lit tax. Everything. Yeah.
But I was lucky to have the opportunity to give her this perspective.
Four for Rotary Love is always good, even though we're a small group today amongst friends. Always good to see my friend Andy Heine, and always great. I see Chief Ashley in the office, was always great for us to be out together. One thing we Chief Campbell preached at the police department, and Chief Ashley and myself also back from is that we is not I, and so as we go out and do things in the community, we like to do stuff together. So it's always great for us to get out together and be seen, be able to talk and so forth. So that's it. I got another dollar for Rotary Love.
Can I have your votes?
Oh yeah. Well, you know what? It's my last dollar is come out Friday night. At the game, it's going to be City against LaPorte in the sectional semifinal. As you know, my son plays for LaPorte, even though I'm a Michigan City person. Love Michigan City, but it's the only time I would root against them. Lee Corley is playing. But it'll be a epic game. Michigan City and LaPorte should come and fill the stands. The last game against those big boys were a great game. Michigan City won by 3. It was one of the breakout games in the league, but again, it was a great game. Either way, it was a win-win situation for me. But it'd be great for City and LaPorte to come out and support the boys for this game.
Where is that?
It's in Plymouth. It's a sectional. So what happens with the sectionals is that now they are rotated around to different schools. I always think that why would you not have that one of the largest gyms in the state? But hey, come on. So yes, come out if you can.
Can I piggyback on being out? So I wanted to I remember that we had, you were there. We had several people from Rotary and Michigan City at our Live to Lead webcast at the Civic Auditorium. And so Vibrant Communities provided scholarships for about 30 people to attend. So, and these were national speakers. It was really uplifting. So I think she's going to do it again next year. So let's pack the Civic because it got her a little bit. But I'm so glad you were there. Yeah, it was great.
Yes.
I have a couple dollars just Rotary Love there for you.
Thanks, God. Did Derek want to put some money in? Make an announcement? Anything to share?
How's this work? So.
Anything you want.
Well, it's a ritual, Derek, so the first time you contribute money, you have to sing a song, so. As long as you're up to singing a song.
I have some good news though. I think the anthem is finally wrapping up. And our last week. I think just started to get better. Most start to open up after 3 years. So I think that's some pretty good news that I have.
It's not been 2 years. Because
2 years.
Yeah, it feels like that. And also, I just went to, Mike Pound is having an open house at his house on Saturday. If anyone wants to come over and cheer to Susan Pound.
Yeah.
So that's at his house in South Bend. So if anyone wants the address.
Yeah, email me the address. Okay.
Jim.
I got $5, most of it to Mike because this is money I earned from my SPY.
Only $5?
That's all I got.
What's about 50 cents worth?
He keeps canceling the meeting, Maggie, when I keep wanting to talk about the spending, you know.
I will say one thing though, I kind of manipulated it a little bit, when Putin surrounded Ukraine, I sold 5 shares of the stock. When he invaded Crane, I bought 7 with the same money that I sold for the 5. So I gained 2 shares.
See, remember all those things I was telling you guys about not timing the market? and not pricing? Jim, obviously didn't listen.
Hey, it worked for a change.
Anybody online? Susie, John, Kara, does anybody have anything?
I just want to say we had quite an adventure this last week on Monday with the Strive program. Through a comedy of errors, we ended up at the very top of the Blue Chip Casino, and the kids loved it, those that were there. And so I encourage everyone who has a student to connect with their student and get them to the next meeting at the end of March. Thank you very much.
John or Kara, do you guys have anything?
Come on, John, I see you unmuted. What do you got to say?
I just want to tell you that it's the beautiful weather down there, sun shining and 80 degrees. And I look forward to coming back and being in person with you guys next month.
Thank you. Kara's not allowed to unmute until she pays her fine, so.
You're funny today.
I know. All right, does anybody else have anything? If not, I will have Marty's guest pull the ticket.
Wow.
Yeah, I trust you.
Marty.
Hey, yeah. You never gave me
No, that was.
All right.
541-3664.
That's me.
For I don't know how many years
Are these
now,
the
but
cards?
it's the first time I've ever had my ticket drawn.
Well, you know why? It is National Women's Month. You know that?
There you go.
Women for women.
She has to come to every meeting.
All right, Katie, I have looked and I can't confirm there is no queen in here, so. Oh, sorry. Yeah.
You started the roll.
Pick a card.
Oh my goodness. There's a lot of parties there.
Right, yeah, you have a 1 in like a lot of chances.
Yeah, that's what we got full deck.
She pulled a queen.
Queen Hearts? All right.
So close.
I'll let you know next week what it's worth.
We won't end the way, if anybody goes back, Maggie probably remembers, Jim might remember, the old days when we used to have the Harbor Chevrolet guys. And we won't end by doing what the Harbor Chevrolet guys did. They would tell everybody to get $1 out, and they say, I have a number in my head between 1 and 1,000,000. What do you guess? Wrong. What do you guess? Wrong. What do you guess? And everybody'd be wrong because nobody could guess the number 1 out of 1,000,000. So we will play the Harbor Chevrolet game. So thank you all. I will be back. I'm trying to get here, so thank you for letting me be here.
Thank you, Sarge. And I want to thank you for not finding me today too. It's always nice to not be fined by Sarge. And come on back next week. Who's our speaker next week here? Speaker Ranger, do you remember?
That's somebody's hand.
Right. That was this week, wasn't it?
Hold on, give me.
That's all right. Whoever it is, we'll come back and see you. That's
I
right.
just arranged for P5 to come on the 24th, but that's not.
Okay, well, I'll see all you guys next week. We are adjourned. Thank you for coming.
Hold on.
Oh, wait. She's still
Oh,
on.
it's Janet Buechner about the Michigan State Promise Scholarship.
Who was it again?
Janet Buechner, she's gonna talk about the Michigan State Promise Scholarship because there's been some changes to it.
Okay, great. Good reason to come next week.
Right?
See you then. Thank you. Bye, guys.